Number of things that have gone right this time. Firstly, the lower level of interest rates meant that the non-performing loans as well as the bad debts have improved quite considerably during the year. Secondly, we focused on a number of activities. Even though the interest rates have come down, focusing on collections and credit granting has been very, very important during the period. We recognize that the environment was tough way back in 2008, and we appropriately rearranged our strategies in that environment. But also, we've been focusing on reducing our costs. So cost containment has been a very important theme throughout our franchises in FirstRand. And also, we've identified a number of growth opportunities, both in South Africa as well as outside, which are now beginning to make some contribution to our revenue as well as profits. Particularly in this country, we've been focusing on the mainstream market. We're rolling out easy plan branches, cell phone banking, as well as opportunities that we've identified in our investment bank. But I think it's also important that in our investment bank, there was a very significant realization out of the listing of Life Healthcare, which contributed meaningful profits in RMB. Momentum benefited from the improvement in the equity markets, which has been quite good, but also they managed cost quite well.
And just on the private equity front, what's the environment like for further realizations in the current financial year?
Well, we have a very diversified portfolio in private equity, and that portfolio will, in fact, continue to be realized at the appropriate times. Maybe in the current year, we may have one or some other realizations. I think it's important to note that we try and realize when it is appropriate to do so in that portfolio.
Now, of course, you mentioned the improved impairments. Also, one of the big headwinds you faced last year was the trading losses on your offshore portfolios. Those have reversed this year, and you actually looked at profits.
Of course, if you look at our equities trading business, it's actually posted very good profits in the year from a loss situation last year. So that's been good. We still have some legacy portfolio from our old special projects international initiative, as well as the deal stream portfolio. But that portfolio has been impaired. It's very well managed now, and the levels are quite manageable as well.
You mentioned your bad debt ratio is down from 2.39 to 1.7%, and I assume you're still seeing that to reducing as you go into the current year. How about cost containment? Is there more that can be done on the cost front as well this year?
Of course, there are opportunities, especially given that the economic environment is going to remain quite tough. We must therefore continue to focus on cost containment in the group going forward. And if you look at our bad debts, it was actually 1.3. That's the average impairment ratio. That's improved quite a lot, especially given that we'll continue to focus on managing our credit portfolio quite strictly.
You did say in the commentary, though, that it's going to remain a tough year for banks in South Africa. How are you seeing the consumer at this stage, particularly with the most recent interest rate cuts? Do you think that will provide a little bit more relief that could help bring everything together for you?
Yeah, certainly the reduction in interest rates will increase the level of disposable incomes in customers' pockets, which means they'll either continue to repair their balance sheets and pay down the debt, or start to spend. In fact, in certain portfolios, for instance, in West Bank, in the motor vehicle loans section, we've started to see some growth already.
How about businesses, though? Because if you look at the latest private sector credit extension numbers, there is a little bit of credit demand, mostly for mortgages. In the business side, though, there is shrinkage there. Are you starting to see businesses regaining confidence and starting to tap you for loans?
I think it's fair to say that businesses are still sitting on the sidelines. However, they're sitting with very strong balance sheets with cash flows which are still available and, lower levels of indebtedness. And therefore, as confidence begins to return, and capacity utilization starts to grow, we'll start to see corporates invest again.
You talked about growth opportunities in South Africa and further afield as well. How about Nigeria? Because you have expressed interest in buying perhaps one of those distressed banks in Nigeria. There have been rumours that perhaps you could be looking at Oceanic Bank. When might we hear anything on this front?
Well, we must recognize that the Central Bank of Nigeria is managing the process, and clearly they've got to manage the process quite carefully. It's taken a little bit longer than what they had originally anticipated. As FirstRand, we continue to look at opportunities in Nigeria. We think Nigeria is very important, and therefore we're looking at all options in that environment.
Have you identified a bank that you would like to buy in Nigeria?
Well, we are busy with a number of initiatives right now.
And have you been speaking also to the Registrar of Banks, Earl Kruger, because obviously this would be something that you would need to pass by our banks?
Yes, we have kept the local, central bank informed in terms of prospects and the update in terms of where we are with various opportunities.
And Basel III, we had, of course, those agreements signed up over the weekend. Those are going to be taken to a meeting in November in Seoul. How do you view those? Obviously, South African banks have remained very well capitalized during the crisis. Going forward, though, are you confident that you will be able to meet those new rules as they come in, which is a number of years from now?
Yes, we're quite confident that we'll be able to meet them. If you look at what has been put out there, especially given the phased approach that the Basel III proposals, in fact, guidelines have, been, determined. We're quite comfortable today. We're quite comfortable that going forward, based on our profit generation as well as our capital utilization on new initiatives, that we will be able to meet the Basel III proposals.
Of course, we've had Earl Kruger, the Registrar of Banks, saying the liquidity requirements could pose a challenge for South African banks. Do you see them just as a challenge, not as a big obstacle?
We don't see it as an obstacle at all. Clearly it does mean we've got to continue managing our capital properly, and we've always done that, and therefore I don't really see that there's going to be a large amount of difficulty in meeting the requirements.
Even allowing for any capital investment you might need to make in growth opportunities going forward from here? Absolutely,
yes. I mean, we've taken that into account in our forward plans, and therefore if you look at our forward planning in terms of capital ratios, we should be quite, comfortably within the requirements.
Sizwe, we also have HSBC trying to buy a majority stake in Nedbank. How's that going to raise the bar for competition among South African banks? How do you see that playing forward?
Well, certainly what it does is creates another formidable competitor. But at the end of the day, we have our own strategy that we are executing, and we'll continue to do that. We compete with some of these banks in different parts of the world where we operate quite successfully.
Does your strategy include also linking up with a foreign partner perhaps going forward so you can match them on a level playing field?
Well, we mentioned that we signed an MOU with China Construction Bank, last year, and we continue to enjoy some benefits out of that relationship. At the moment, we are not necessarily looking at a tie-up on an equity basis with another international bank.
Have the benefits been tangible? Are you tapping into those growing Asian and African trade flows?
Yes, of course we are. We've seen, an increase in deal flow coming out of China, mainly out of our relationship with China Construction Bank, and we'll continue to leverage that relationship.
Sizwe, obviously a big improvement in this year's results. How do you see the current year going forward from here? Do you see the consumer and businesses getting back on their feet, and will you be able to build on the turnaround you've shown here?
Well, the important thing is that the reduction in interest rates will certainly benefit the consumers, will put more disposable income in the consumers' pockets. And that will start to either reduce the level of bad debts as well as start to increase the level of advances and our ability to lend.